Welcome back to the Groundfloor Market Trends podcast. This is episode 6. I am your host, Patrick Donahue. Today, I'm very excited to be joined by my colleague and my good friend, Reed Shermer, Groundfloor's Vice President of Real Estate Operations. He's going to help us break down the latest numbers from the August 2024 Asset Management Update. We'll be diving into loan performance metrics, project highlights, and of course, the big news of the week, the Fed Reserve's half-a-point rate cut and what that means for our ground floor investors and borrowers. Reed, welcome to the show. How are you, man?
Great, Patrick. Thank you so much for having me. It's great to be here.
Reed, tell us a little bit about what you do at Groundfloor, what you oversee, and what your general sort of responsibilities are.
Yeah, sure. So within the real estate operations space, the asset management team and the real estate operations team is responsible for providing support and solutions to the many borrowers that choose to lend with Groundfloor. We review review draws for them. We provide answers that they may have. We follow up on progress updates with borrowers. We also manage through the payoff process to ensure that the information and accounting is exactly where it needs to be when they're ready to repay the loan, so that investors can get their return on their investment.
Excellent. And we're looking here on the screen at the August Asset Management Update. This is something that you and team put together and put out on a monthly basis, have so consistently. One, thank you for doing that. And also, we're going to get right into it, start talking about the key metrics here from August. Reed, we recorded 62 loan repayments last month, bringing the total to date year, or is that 12 months, 929 loans were paid over the past 12 months, right?
Mm-hmm.
Can you tell us a little bit about that in context of like what's going on in the market?
Yeah, absolutely. And despite some of the economic headwinds that all Americans are facing right now, and headwinds such as inflation, rising interest rates up until this week, Groundfloor's repayments have stayed relatively consistent. And that speaks volumes for the strength of our underwriting and our hands-on asset management process that we provide to borrowers. Our total repayment volume for August was just over $16.6 million, with about $1.6 million in interest being returned directly to our investors. And that, Patrick, is some fantastic news.
Absolutely. And, in light of, if we talk about what recession has happened in housing over the last 24, 36 months, it's in real estate activity. That is transactions, buying and selling. And amidst that, the consistency across this year's repayment volume, both relative in overall volume and number of loans repaid, has been really fantastic. So kudos to you and your team for that achievement. Keep that streak going. I think September might even have a higher number of units repaid for sure. What's sort of September looking like, if we can give a hint?
Yeah, so September is looking to be a strong month. Our borrowers are facing these challenges. There's no doubt about it. Inventory still remains stubbornly low. Stubbornly low. And our borrowers are aware of that. So they're being aggressive with their price points. They're trying to move their product. They're collaborating, coordinating with the Groundfloor asset management team to provide insight and inputs into what's really happening, because they are really the boots on the ground and providing us with insight that we may not really hear from other outlets. So September's looking strong. We've got another week and a half to go. So Patrick, we'll see how that wraps up.
Fantastic. Let's turn over to rate of return on a monthly basis for this cohort that did repay. Rate of return in August, 9.885. Very close to annual rate, 9.89. It really shows that even with the market fluctuations, Groundfloor has continued a steady performance. So looking at the impact of the Fed rate cut, Reed, before we dive deeper into these metrics that we all want to talk about, the news that everyone's buzzing about is this Fed rate cut, 0.5%. I incorrectly bet a quarter at our management offsite and was beaten by our customer service man. And he predicted 0.5, and he was right. So We got 0.5% rate cut. How do you see this rate affecting Groundfloor's own performance in the broader real estate market? I certainly have some thoughts too, but want to hear yours.
Yeah, well, as the last year and a half, 2 years has been any indication, when Chairman Powell speaks, the world listens. The Fed's decision to cut rates certainly has the potential to stir things up in the real estate space. And it's making us here at Groundfloor very excited. Borrowing costs could make it easier for some borrowers to refinance and exit out of loans. This could allow them to complete projects faster and repay investors quicker. Therefore accelerating loan repayments. For Groundfloor's investors, this could ultimately mean faster turnaround times on investments and the ability to recycle that capital and reinvest at a quicker rate and continue to enjoy those rates, for all investors. Some borrowers are going to also be looking to refinance earlier than expected. They're going to take advantage of rates out there and this rate cut, and I think we can see certainly a positive direction that this is taking us to.
Yeah, I really agree with that, and highlighting that it really is, just as we mentioned, the reverse of the activity dilemma, right? This should spark activity. It was interesting that mortgage rates ticked up the day after the cut, but that's more in line with what the bond market sees. And the bond market is always ahead of the Fed, or has been in this cycle. So, but in general, right, rates on a downtrend, which is what this signifies, is going to spur activity, which you mentioned. And I see on both sides of our platform, significant benefits. So it's a real win-win, as they say.
Yeah, and look, Patrick, there's millions of buyers that are sitting on the sidelines waiting for the opportunity to jump back into the marketplace. So they're as excited as we are for the upcoming impact to the mortgage rates that this rate cut will hopefully lead to.
Man, that is a fantastic point. You and I, and Eileen, your head of REO management, have been talking about the bidding of on projects that are not complete, on those projects that aren't complete, which you're dealing with certainly a handful of those. And I feel like the bidding of those types of projects during the inflationary rise and interest rate increases was really hampered. It was radically different than what we saw prior to those cycles. And I think bidding on those specific projects, both on new loan applications and on projects that investors that are perhaps halfway through a project can certainly move on from, and there's going to be more active bidders on those. And I think that's going to be a change that shows up in the next 12 to 24 months.
Couldn't agree more, Patrick.
So let's talk about loan performance and loss ratio this month. Get down here. Here we go. Groundfloor had 5 losses in August. It had a 2.68 loss rate, higher than the 12-month average, which is 1.27 this year. So what's your take on how this fits into the overall health of the portfolio?
It's a great question, Patrick. And while we did have a higher loss ratio in August, I'd say it's nothing to be alarmed about. Over the last 12 months, our average loss ratio has been about 1.27%, 1.26%, and historically has maintained well below that. Almost at 0.7%, a little lower than that as a loss rate, which is incredibly low for this industry in this space. We're always working closely with borrowers who face challenges, and more often than not, we do find ways to work things out. This ultimately leads to a minimized risk for our investors. Just because loans do move into the default space does not mean in any way, shape, or form that it'll be a loss. We have lots of tools and lots of resources that we can help guide borrowers that have run into trouble to exit their loans and provide a near or full return on investment for borrowers.
Yeah, that's a great point, and it really moves us into sort of what we want to look at next, which is some of these project spotlights, which is my favorite part of your blog. It's amazing that you guys put this together every month. And let's talk about some of the success stories that were stories that sort of went from out of the default status into a success story from last month. So why don't you walk us through a couple of these projects?
Yeah, and in the monthly asset management blog post, we do take time to highlight some of these, and they're not always going to be wins, and they're not always going to be losses, but we do try to provide a good understanding of some of the challenges that we do face as investors and lenders, as well as the successes that we see from this. One great example is 2225 Sergeant Place Southeast. The loan matured back in the summer of 2023, but the borrower, as a result of the borrower running into some construction delays. Thanks to our defined asset management process, consistent communication, some creative problem solving at our end, the borrower was able to ultimately secure refinancing, repay the loan in full by August of 2024. So although the loan was a year late from when it was supposed to repay, it still wound up providing a tremendous return for investors. And it just goes to show the tenacity and diligence that our asset management team delivers day in and day out to never give up and to fight for all the investors on the Groundfloor platform.
Yeah, it never ceases to amaze me the amount of contact points that your group makes on a consistent basis. It's really amazing. And let's move on to 9 West Walnut. Tell us about this.
So 9 West Walnut was a loan that matured quite some time ago. It went through the foreclosure process, and even sometimes in certain jurisdictions, after the foreclosure process is complete, sometimes squatters or vagrants may move into the property, and that was the instance here. We had to go through the entire process of evicting the folks that were living in that property. Obviously, it's a tricky situation when you have to get evictions involved and the sheriff's office involved. We follow the paperwork through the courts. We follow the process and procedures as each state dictates. We have to do so with a tremendous amount of diligence and a tremendous amount of empathy. We are dealing with people in these instances. And so we want to make sure that we're dotting all our I's, crossing all our T's, and making sure that the process is followed so that we don't have to go back through it again for whatever reason. Ultimately, West Walnut did repay quite some time after maturity, of course, but we see it as a win due to the full principal and some interest repaid back to investors after that length of time. I think that was a real win for our investor base.
Absolutely. And I love what you do here with the August project spotlights. That is the before and after wins from our platform. I love this property in Catonsville, Maryland. That's an area that I'm familiar with, having lived in the DC Baltimore area for a bit. And so let's walk through this one a little bit. Total loan amount $341, a little bit higher than average actually for our loans. Took 12 months. It's what's that? A 50s ranch style sort of house that got converted into sort of the modern version of what that would look like. I don't know what else to say that.
This is my favorite part of putting together the asset management blogs to show the before and after. This is what we do.
That's what we did. That's right.
You take an older property that's falling apart, and we are working with our borrower partners and our builder partners to create something beautiful. I mean, Patrick, just look at the engagement with the street. It is absolutely
that's right.
What they do with the kitchens and the baths. We try to highlight some of these renovations and really highlight not just the curb appeal, which is the aesthetics of it, but the value that we're bringing back to the community, the value that we're bringing back to the neighborhoods in which we work and live. Like you said, you're from that part of the country. Where we invest throughout the Southeast and Northeast, around the country, Groundfloor is there. We live and work in these communities as well. So to be able to participate in the revitalization of these neighborhoods is something that we definitely want to highlight in our asset management blogs and kind of show off our stuff.
It's so true, and I tend to try to keep my wife away from the before and after section of this blog because the new kitchen ideas that she gets can cause me some.
We'll have to remove her from the distribution list, Patrick.
We like to share when we're in office. We like to share an espresso, together at the 3 o'clock bewitching hour. But I'll tell you, I'd love to have my Saturday morning coffee sitting at that kitchen bar and looking at that beautiful kitchen. You create a home for a family, and what better what better way to spend your time than to, get, well curated projects in the hands of capable entrepreneurs to create, a real winning house like this that's really in the affordability range of, a lot of Americans, which is, something that we can really be proud of at Groundfloor, I think. And thank you to the investors that funded this, and good job, borrower. Look at this, Hoover, Alabama. This is certainly the Southeast. I don't even know what you describe that style as, man, but it's a before and after for sure. And tell us about this project. Reed, this total loan amount, 337, 12 months, repaid date, August 21, 2024, sold for 525. Another beautiful house in Hoover, Alabama. That's probably a little bit on the third segment from bottom to top quartile. So it's probably a little bit on the higher end. But what do you think of this? Look at those windows.
Well, it's like when they pull the bus away from the front of the house and boom, it's an extreme makeover right in your face. This is an incredible example of what we do. Look how dark and dingy and mysterious those before pictures are, and then afterwards, look how bright and exciting and engaging that what our borrowers have done with the property. Yeah. But this is what we're doing all over the country, Patrick, from Hoover, Alabama to Maryland to Florida to Georgia. We're revitalizing the communities. We're breathing life back into these buildings and these houses and these neighborhoods. And this is another fantastic example of a beautiful work done by our borrowers, highlighting, bright colors, accenting with great landscaping, and really bringing a tremendous amount of light and engagement into that living area. So this is a great example of what we do around the country, and a real win for, and again, this is right in the price point where, you've got that, that swing spot, that hitting the bat in just the right spot.
Yeah. Love that kitchen, clean, organized, stainless steel appliances, beautiful flooring.
Yeah. Beautiful property. Very, very well.
Before and after of that. I mean, who knows what was going on in the house prior, but look at what it's become for sure. That is a real asset to that community for sure now. Fantastic. Well, Reed, unfortunately, our time is drawing to a close. It's been amazing talking to you. I did want to remind our listeners about our Groundfloor's stock offering, available on republic.com/groundfloor. I tend to get that wrong, but it's republic.com/groundfloor. An incredible opportunity to invest in Groundfloor itself. It's not just the real estate projects we manage. With the recent 0.5% rate cut, the real estate market could really be poised for even more activity, and it could have a absolute positive impact on the business overall. So if you have the capacity and the willingness, please visit republic.com/groundfloor. Lower interest rates lead to uptick in borrower activity, Reed. We both know that. More projects on the platform and higher returns for our investors. Reed, thank you so much for joining us. I hope that you come back next month to talk about the looking good September outcome for Groundfloor. You're always invited, my man, and thank you so much for coming.
Thanks for having me, Patrick. It was absolutely a pleasure to spend time with you and the community, and looking forward to many, many more to come.
All right. And with that, until next time, I am Patrick Donahue with my esteemed colleague, Reed Shermer. Until episode 7, Groundfloor Market Trends, people. Happy investing.